Oh, aloha everyone. Joshua Hayes at BigWaveTrading.com. Tuesday session in the overall market was about as dull as I can remember a session in a long time. On the surface, when we look at the S&P 500, looks pretty good. It's a good looking chart, right? Right? Well, we don't have any volume, of course, so, let's remember that. Keep that in mind. DIA looks okay, yeah, but the no volume in the red bop, doesn't look the greatest, hasn't looked the greatest for a long time. This is one of the longest stretches I've ever seen the Dow Jones Industrial Average have this much red on the chart. Boy, oh boy, if we can't get it cooking for the rest of July, tell you what, as we come up to the seasonally weaker months of August, September, we better start doing some work. But before we can do some work, you got to ebb and flow a little bit better. Something this market doesn't want to do, and we'll get back to that here in a second. But the QQQ, you can see that was barely up today. The NASDAQ basically up a little bit less, but once again, look at that volume. Lower and below average, and S&P 500 with the New York Stock Exchange volume lower and below average. So once again, we just have a market that just won't do anything right ever whenever we need it to. We're in the bullish seasonal month of July, so we need the market to trend higher, but we don't need it to trend higher 8 days in a row on these indexes, which is what it's doing on a lot of them. We had basically a minor red day here, but 1, 2, 3, 4, 5, 6, 7, 8 up sessions in a row. I consider this session the only down session, and it's good that it came on lower volume, but this was a holiday shortened session. So overall, it's just a market that just does not like to ebb and flow. And on the IWM, we got another one of these V-shaped moves. I just don't understand. Well, I do understand it is what it is, but we just can't, I should say that, we just can't get anything right. The best markets, if you want to know how the best uptrends start, go study any of the follow-through days from the late 90s that after a downtrend started. And the best one ever in my history of following the market during my trading career was the 2003 bottom. That was the absolute perfect bottom. We had beautiful charts that led it right into the bottom, and then after the bottom, more and more kept showing up. But more importantly, you had like a big initial up day, maybe that another big initial up day. Then you have 2, 3, 4 days of sideways or calm, slightly lower price action. Then you have another big up day, like huge, like 2%, 3%. Then you go sideways, maybe a week, 2 weeks, you pull back for that long in lower volume. Then you have another big up day. Those are the best market uptrends. The worst ones are V-shaped market uptrends. And once again, the IWM is getting us that once again. All hope is not lost, however. Let me pull over the bigger charts here. You can see, we are trending higher, but the most important thing is that New York Stock Exchange advanced decline line is still up at all-time highs, barely pulled back today. I do like that following today's down session, the IWM, and the put-call ratio did move higher today to 0.93. It's not at the fear level yet, but it's getting there, and that's pretty good despite the recent gains that the Russell 2000 can barely pull back with the rest of the market up, and yet we still have an increasing put-call ratio. So it'll be interesting to see what happens. Futures are gapping down currently. I don't know what's going on, but if you look, you'll see that the move is pretty big. And if you're like, well, what's happening? I'll tell you what's happening. We just had another irrational low volume move in the overall market in pretty much another V-shaped manner. This one's a little bit more round than the recent, V's that we've seen, but it's still a V. It's not a U. There's really no sideways consolidation. It was down, up, and like I said, it's more pronounced than the Russell 2000. So keep all of that in mind going forward. Now, getting to the meat of the action today, you can see here, had my limits filled. VSTM, I missed by 1 cent. ORN, I missed by 3 cents. It is what it is. My DWSN that I missed, I can't remember if that was yesterday or a couple days ago. It got filled today. And then my MGRC add signal from last week filled today, obviously reduced positions in DWS and MGRC. And you can see in the first 30 minutes of today's trading session, actually slightly less than the first 30, or slightly a little bit over. So the first 31 minutes, I only had 2 stops triggered. They were both hedges. And then as the rest of the session went, a partial profit stop, a partial profit stop, a partial profit stop, half remaining sell stop for a 2-cent loss. 335 is what my average cost was. 333 is what this half of my remaining position was sold for, and then another partial profit. So everything was very orderly on that end, and on an end of day basis, there's only 2 sell signals, RCM. 50% sell signal goes with a 50-day moving average and above average volume with BOP going negative. I'm moving half of my remaining sell stops to today's low a day. I then currently have 1 final sell stop on my remaining position. I'm giving, excuse me, I'm so wrong. I got 2. One, I'm looking at the wrong chart. I was thinking here was here, but here is what I'm trying to focus on. So half is here. And then for right now, I have the other half right here, a quarter, excuse me, right there, and the final quarter right there. So a quarter here, a quarter there, and half of what I have of RCM remaining right there. And then the only other end of day signal, SEND. SEND is a 50% sell signal. I do not have a position in this. I went long SEND here. I moved my final stop. I don't know what happened here, but I believe here it knocked me completely out of it. I got an add signal here, and then I believe after this day right here, I might have consolidated my stops and got knocked out here. But bottom line is, I don't remember. I no longer have a position in SEND, but if you do, this is what I would do. This is a 50% end of day sell signal. I would have 50% here, and then my final stop right there, 24.61. So it's only splitting hairs before 24.73. So then maybe what I would do, if I was still long and I now see that, but remember, I don't have a position anymore, so this is for you guys if you still have it. I would go ahead and move 100% of whatever I had left to there if I had 100 shares. Now, if I had something like 1,000 shares and a 10 cents would make a difference, then yeah, 500 here, 500 there. But if I have 100 shares or less of SEND, I just move it all to 1 cent below that low a day. And then that leads us to the new long positions. There's only 2. And folks, I don't love either one. I kind of really like one, but it's hard to really like it when it's as risky as this. So first, let's go with the more safer one, NEW. NEW is a Chinese IPO. It's in the hot education Chinese sector. The leading stock in the sector is a stock that I'm still long, HLG. I have a stop here, and my final stop on HLG is right there. So I currently have 2 stops in my remaining position. But NEW is from that sector. You can see after a volatile start, it's been rounding out. You got a bullish hammer candle over candle price bar on heavier above average volume, and BOP is positive. And we have multiple support levels to work with. So it wasn't confirmed in any scan, but it did make my IPO scan. So 1% of my account capital, limit order 1965. First cut loss right there, 1869. Second cut loss right there, 1890. 1819. Final cut loss right there, 1699. I mean, I really don't risk much at all on this position if I'm wrong. 6-7% overall if you just use this final stop. But if you do take this as a new long position, you know, for new traders or uninitiated, I want you guys, if you're not making money immediately in my picks, just get out and wait for the next one. This market's giving us a lot of picks. It sucks that we can't get the ebbing and flowing market that I was talking about to get those nice longer chart patterns. Like NWY is what you want to see out there. You want a lot more of these though. You don't just want one. And NWY is really the only one that looks like that. And then, you know, stocks uptrending like RG and X, there isn't a whole lot of stocks that are doing that. So just keep all of that in mind with these signals. But NEW, if you go long, I just want you to obey the first cut loss level. And then the final long signal of quality, MRNS. I like this stock. This is the past year plus chart. You can see huge move whenever it went from its May lows to December highs, right around a little over 700% move. So obviously, based on that, it's perfect speculator quality. Well, the stock is back to being perfect speculator quality now that it's within 20% of its 52-week high. But it was, I'm not sure where was it at relative to this here, because I don't remember if it was perfect speculator when it wasn't, of course. So when I first flagged this as a possible long for MRNS, this just showed up in my price volume BOP surge scan. Was out of my mind that it used to be former PS quality, so I really didn't consider this as a new long signal. Did flag it, but I just really didn't think that if this would have been green leading into the session, sure, but it wasn't. So I passed it there when it gapped up here. Still, you know, I saw it in my tertiary scan, I think, but I didn't want it. But now it's back to being perfect speculator quality. Might have been on that last signal that I got, but now that it's back to being perfect speculator quality, it's triggering a pocket pivot point signal with a bullish candle over candle price bar on above average volume, with green bop increasing after already increasing the session before. So that's pretty good follow through. The problem is today's move is outside its recent ATR. You can see its intraday range is much bigger than anything you see here lately, and it's extended from the 20-day moving average. So those are two negatives. So MRNS should have been a 1%, but it's extended, so 0.5% of my account capital, 0.5%, $2,500. $8.04 is my limit order. My first cut loss level is 719 right there, and for now my final cut loss is 642. If you decide to take this trade, which I don't recommend based on it being a higher beta stock, the extension of 20-day moving average, the outside ATR to more recent price intraday ranges, if you do take it, only use that stop right there, 719. So if you go long 804, you got to stop out at 719 no matter what right now. All right, everyone, I'm going to go ahead and wrap it up here. I will see you in the chat room Wednesday morning. I'm a little loopy right now, kind of sleep deprived. My girlfriend's extremely sick. She's got bronchitis. Hopefully she gets better soon, but it's impacting my sleep schedule. So if I seem a little, that is why. All right, everyone. I'll see you in the chat room.